Hope you guys are all doing good. Sorry, just getting set up.
Oh,
You guys are all goated. Thank you guys for showing up. Appreciate it. Appreciate it.
Yo, EP.
yo, what up? What up?
Oof. We're gonna wait a couple more minutes. Hope you guys are all having a good day.
Yep, just trying to get some people in here. Okay.
All right, one more minute. I'll start talking a little bit. Yo, yo, yo. Welcome, everyone. All right, well, I'm gonna have it where you can't unmute yourself. All you have to do is raise your hand. We will be taking questions later on. So make sure to just once again raise your hand or just ask it in the chat, and we will for sure answer the questions. But we can get it started. A second. So I'll just start talking off right off the bat. But once again, thank you everyone for coming. This is the first kind of free webinar we've done so far for No Limit. If you guys don't know me, I'm Luca. This is EP. It's my partner. We both wanted to come here and basically show you guys how we trade, go over our confluences, and give you guys some tips on how we were able to become profitable and how our outlook on the market. As more people are kind of showing up, I'll just give kind of like a background of just like, I basically started No Limit in like 2021. I'm someone who learned about trading through like MLMs and through IML basically, and I wanted to basically create a space to show new traders how to actually trade, because in my opinion, I didn't really learn from that type of stuff, and I want to kind of put a good name to trading. You know what I'm saying? So I wanted to create a space to have a bunch of like-minded, people trying to actually make it in trading. I'll be able to like push each other to do better, which, after 2 years, I feel like I've definitely created it. We have over 60 people in VIP, keep growing every day, and it's great. So many people learning so much from the strategy that we're going to go over. So once again, I highly recommend taking notes and write down everything we have to say. About like a year ago, or about like probably 8 months ago, EP was, an NLT member, saw him killing it in the charts. And, he was like super young, getting payouts from funded accounts. And once again, we trade similar and, sign him to the brand. Now we're both, doing our best to
Trying to educate everyone.
educate and push each other to do better, and push all you guys to do better, to be able to actually, make a difference and, make it in trading. Because we all know that it's not an easy journey. And if it was, then everyone would do it. And, all we try to do is make your guys' journey a little easier, because all the trials and tribulations we've been through, I feel like being able to tell you guys them and show you guys what to do right and what to do wrong will help you guys overall in the long run. But now we're killing it, and we're gonna get right into it. But let's go right into the first thing I kind of wanted to go over was how I trade. That's what a lot of you guys kind of wanted to know, is how we kind of trade. So we trade supply and demand. I trade supply and demand. So before, all you guys were like, oh, what the heck, da, da, da. Like at the end of the day, it's strict. Like I'm like mostly is looking at price action. If you can't read price action, then you can't even do supply and demand, because there's so many things that validate and invalidate, in my opinion, supply and demand zones. And learning the price action within the supply and demand zones is very key. I actually have basically, I kind of wanted to go over the 3-step thing. I kind of gone over it on live. A lot of you guys asked kind of a more in-depth kind of description on it. So I wanted to kind of give you guys an example of when that happened on G right over here, one thing that a lot of you guys don't know that I'm actually going to say right now that I find simple is I trade on the 5 minute time frame, and that's where I spend a majority of my time paying attention to is the 5 minute time frame. I look at higher time frame biases. I look at the 4 hour, look at where we've closed, where we what direction we're possibly heading in. But overall, when it comes to my entries and all that type of stuff, I am taking it off the 5 minute and sometimes the 1 minute, and we're gonna go over all that type of stuff. I'm just showing you guys, basically an outlook of, I'll go out to the 4 hour, get kind of a bias over the last like four candles of what kind of direction we're heading in, drop down to the 1 hour, kind of establish what direction we kind of are looking for if we're at like near like a support or resistance. And then once again, look where my MAs are. If you guys do not use, sorry, I'm adding some more people in. If you guys do not use moving averages and you want to use the ones, or you're curious the ones that I use the 8, the 50, and the 200 smoothed moving averages. So if you guys want to write that down, smooth moving averages, the 8, the 50, and the 200, I use them all for different influences that throughout this, little webinar, kind of give you guys some tips. But the thing I can tell you guys off the bat when it comes to using the MAs is when it comes to the 8 MA, the 8 MA to me is not only an entry moving average, but also it kind of gives me a short term, like once again, as you can see, when we were moving above the ASMA on the hourly, what happened as soon as we started kind of closing back below is we started turning bearish again. It's just a really, a closer MA, because once again, a lot of people use things like the 200 to show you direction, which is, very clean. But in my opinion, when we're scalpers, I have lower time frame confluences with the 8 that I want to go over, that that I think is, very beneficial. What I wanted to go over with the 3-step is how I look for direction and why I look for a break of structure, a liquidity grab, and all my type of setups. So if you go back over to GU and I come back up to this sell kind of supply that happened earlier, if I press replay, come up to here, what I saw off the bat that made me interested in this trade. Once again, we actually executed on this trade. So once again, this is all sent out to the VIP. It's all good. And it was beautiful. Oh, what's up? We got Dr. Dollar in the motherfucking building. Shout out you, bro. How you doing?
Dr. Dollar.
Appreciate you for being here. Basically, when it came to this GU setup, what I saw off the bat was around London Open was all you saw was a big liquidity grab to the top side. What happened directly after that was huge bearish engulfing candles coming back down into the range. In my opinion, if you trade kind of liquidity grabs, which EP is really good at, it, he's going to go over, is taking it once we get that close back in, looking for some type of break of structure on a lower time frame, and then getting the close to then take it back down into the range. But I wait for, once again, some type of supply or demand set up for like a break and retest, and that's why I was patient on this trade. So the first thing that I looked for was the liquidity grab. After it came up here and got all these buyers in and immediately came back down, I was automatically thinking, all right, well, we're turning from bullish to bearish. We were obviously at all-time highs. These were the Asian highs of that day. And a lot of people were probably aiming for the New York and London highs of that day, but all it did was took all them Asian buyers out from this area to then come directly back into the range, come all the way back down, and then break structure to the downside. So after I got this break of structure, which happened right here, right? It kind of started coming back down and rejected off the 200 and came back in. So once again, this is one thing that you guys should write down if you're not really, familiar with supply or demand, is you want to mark up the supply or demand that broke structure. Because obviously there's a supply up here. Obviously there's a supply up over here. Like there's so many supply and demands like everywhere, but I always pay attention to whichever supply or demand broke structure. So you see that right here, created a nice supply, got huge, rejection right off the 8 and the 50 moving average, directly down, breaking support, closing below, absolutely showing you a break of structure. So once again, this was the last supply that broke the structure. What happened after that was I marked that up. I could just like delete this, but just on the 5-minute time frame, box up that last bullish candle before that bearish move. And then, basically you set an alert. I'd have my alert set right up here, wait for price to come up here, set my alert. I'd come back over here, check it out. I'd see how it reacts. I love that it's meeting up with my 50 moving average, as well as, right above my 8, because what I would want is some type of price action to happen in this area to then possibly take shorts to the downside. Sorry, I'm admitting more people. After, once again, we saw price come in this area, we were waiting for a nice entry signal. I think it waited longer. Yeah, so here, boom, tapped right into the zone. At this moment is when I dropped down to the 1 minute time frame. I dropped down to the 1 minute time frame, and I saw that if we start closing back below my MAs, and then at that point, as I'm looking for a break of structure, I kind of drew up a little trend line that was forming in this area like that. And at that point, I was just being patient. I didn't get in there yet. Waited for some type of break and retest in this area. Once we started closing, once again, back below the 8 and the 200, all I was waiting for at this point was some type of price action signal in volume to then get in. So basically what happened was, like, I think it was right there. If I hop out to the 5 minute time frame, one thing that's we're going to go over is when it comes to this strategy in this entry type, what you look for is you take it at the 5 minute low. As you can see, we hit the supply zone here, but we never broke below that low of that candle. What happened at the next one? The next candle was a nice, like, not exactly a doji, but a nice bearish candle right here back below, not breaking above the highs. But what happened to the candle after that? It never broke back below. If we're looking at a bearish scenario and we're trying to take sells, you're not taking it until it breaks the candle low. So once again, 3 candles later, huge rejection to the supply area, closing back below the 50. What is this candle doing? Still not closing below this low, but because this candle closes, then you use the next candle up. So you're basically just moving your entry to then, honestly, in my opinion, get a better risk reward, because if you can get a higher entry into the supply zone, you can then, maximize your risk reward. So at this point, I think it's the next candle, come back into the zone, boom. So once again, if I go to the 1 minute time frame, had this trend line drawn up. Oh, it was probably like this. And as soon as I saw it kind of come below here, I had my alert set right here. I honestly wanted to do sell stops, but I don't, I'm not too accustomed to sell stops yet. It's something that I want to start adding to my, to my bag basically. But as soon as you saw this volume coming down after rejecting this, not one, like basically doing like a little mini head and shoulders, it created a lower high for me right here, showing me that if we broke this trend line to come to the downside and get a closure, I want to get in. But once again, we got in with momentum. Basically, you get in right here at the 5 minute break of the low. Stops are above the candle high right here. And then this was like a 1 to, I think it hit like a 1 to 3, I think. Let's see. Yeah, 1 to 3 off the bat. I think it continued to go too. Kind of gave a retracement, and then boom, it kept kind of going down. But if there's any questions in the chat, once again, about the strategy, if I'm not explaining it to the best of my ability, all you have to do is ask a question. But once again, someone asked, what's the best way for HFT confluence with this trend? So when it comes to higher time frame confluence, well, that's what's a little tricky. I definitely do look at the higher time frames. If it matches up with the hourly supplier demand, then it's good. But once again, when I trade on the 5 minute and it comes to this type of setup, I like to make it simple. I trade on the 5 minute, sometimes the 15 if it adds up, and I'm going to give you guys another example of what that means in a second. But if like there's a 5 minute supplier demand, and then you hop out to the 15 minute and it lines up with the 15 minute supplier demand, I'll drop the 15 minute zone because it gives me a bigger zone. And at that point, I'm just looking for the price action on a lower time frame within that 15 minute zone to take a similar type of entry. Once again, looking for the liquidity grab, looking for the break of structure to give you direction, and then waiting for the entry, which is, waiting for price to come back up into the zone, get some type of correlation or some type of reaction to then push price back down, to the downside or whatever kind of time frame or whatever you're kind of looking for. But when it comes to the entry, one thing I wanted to kind of talk about briefly, I'm not going to give away all of it when it comes to my MAs, but once again, when it comes to my 8, 15, and 200 MAs, on the 1 minute time frame, I'm always looking for entries when price is hugging the 8 SMA. That's just a little thing, a little gem I'm going to give you guys. If you guys put the 8 smooth moving average onto your, chart, you'll go back test, and you'll go see so many areas where you might want to take a breakout or whatever. Let's say you want to take the buys above here, like whatever the heck. If you would have had your like ASMAs out, you'll see how far away price is. It always kind of comes back and uses it as a it bounces until once again it'll get to the highs, and if it still remains above the 8 and then breaks highs, that's like an entry signal that I look for. If we're like way above it, I always look for a pullback, because in my opinion, like that's like in my opinion why I stopped kind of trading breakouts, was I would always get like the move and it would always come back and get a retest, which is fine if you know have your stop loss in a good area, but I don't like drawdown. I look for like literally the highest probability setups with the lowest amount of drawdown possible, where I can just get in, get to my TP and get out. So someone said, bro, learning about liquidity grabs for changing my approach. Yeah, liquidity grabs and all that type of stuff. Just, well, once again, it'll really upgrade your game. And I'm gonna go over another thing that you can look for within this, you know, within my entries, which is fair value gaps. EP has a really good YouTube video out on it. I'm probably gonna do a YouTube video pretty soon about fair value gaps. But if you don't know what a fair value gap is, I mean, there's like really easy ways to do it and really ways to, or like hard ways to explain it. I'm gonna do the wait, resume share, my bad. I'm pulling out my annotation to draw for you guys, but basically an imbalance is like, a simple way to do it is like, it's a 3 candle sequence, and it's like really easily visualized as like one large candle whose neighboring candles wicks don't overlap each other. So let's draw it out. So like, let's say that this is the candle I'm talking about. It's like a big you know, bullish candle usually, or it can be bearish, but its neighboring candles don't overlap each other. So it'll be like something like this, and its next candle is like something like, you know, this whole zone from here to here. Let me do it just like a different color so you guys like know, but all in here is the fair value gap. So often what we'll see is let me just draw it like again, but let's say that like price forms like a fair value gap right here. It's like this, boom, huge move. Oh, huge bullish move like this, you know, and then once again, right here is where the fair value gap is. What happens is price uses this as magnets, basically. Price literally uses fair value gaps as magnets. It's a level of inefficiency. A really easy way to kind of think about it is it's a level where there's a lot of buyers and sellers in the market, where or more buyers and sellers, and price usually will come down, and when it gets to that area, will have a reaction because of all the orders in that area. So once again, price usually will give like, you know, moves like this, the top side, and then once again get that move to come back down, fill this fair value gap, boom, and then let's say that like this was the demand you had drawn up. At this area, you could be looking for buys at the break of this candle high. Once you get some type of price action due to our entry type in this area, to then boom, take out the next candle high, take price back up. Because at the end of the day, how many times do you guys see this happening? Is the fair value gap for entries or confluence for entries? Good question. So it's like, it's a higher probability setup if like there is a fair value gap near the, or before the zone, or like around the zone, because you're gonna likely get a reaction in that area. So if you have a like supply zone marked up here, like look at, there was a fair value gap right here. You can see this big move, and you see its next candle right here. There was a fair value gap sitting right here that price came up and filled in this area before getting the move down. If you can see that, once again, like here to here. How far in the fair value gaps do you like to take the trade? 50%. So I personally, everyone kind of has their own ways they like looking at it, all that type of stuff. But I don't like taking it when the candles close 50% or more. Actually, no, that's in my supplier demand zone. The fair value gap, a fair value gap just needs to get filled 50% for it to be considered filled. And you'll see it. So another tip I can give you guys is to add is I have up here Sonar Lab imbalance finder. So literally, once again, we'll have imbalances pop up on my screen. You guys see these boxes right here? I don't just draw these. These are this is my imbalance finder, which once again, you see this candle low to here, huge imbalance here. That price eventually is probably going to come up and fill. You know what I'm saying? So it's just the extra confluence that I use to, you know, find my entries. And I'm going to go over one more little kind of thing before I give it over to EP. Which once again, I just did a video on, which once again, all this type of stuff I'm teaching you guys on my entry with fair value guys, with my MAs, with supplier demand, looking for liquidity, break a structure, all that kind of then once again, leads up to my last kind of confluence I've been using, which I just did a video on, which is correlation. I love using correlation to my advantage because you really find really great entries. And not only that, but you avoid really bad entries because you'll see that the pairs are not doing what it should be when it doesn't, it's not like matching up with what you're looking for. So if you look at the right side of my screen, you'll see I have a section called correlation and my main pairs. The pairs I trade, gold, GJ, GU, AU, and JR30. I mostly, honestly, recently have just been trading like GU and GJ. It's been working for me. I've been finding a lot of success. But I'm gonna go over how I trade GU because I've been, once again, I don't know if you guys saw, but I just passed a bunch of challenges with a 94% win rate due to like literally, I think, 95% GU trades. So when it comes to GU, I'm gonna give you guys an example of correlation. So if you don't know this, GU's inverse correlated pair that I like to use is USD CAD. USD CAD and GU oftentimes like move inverse to each other. So if I'm looking for like GU buys, I should be looking like USD CAD sells should be lining up. You know what I'm saying? So I like right here, you see had the big move down, kind of formed like a W and looked like we kind of rejected here, formed a doji to continue up, possibly break highs. If I go over to USD CAD, it should be doing a similar thing. Well, but here you see that actually broke highs, didn't form kind of an M to then maybe continue back down. You know what I'm saying? Obviously, right now it isn't like the best time. You should do it when you're looking for an entry. But also talking about that is we're going to go over the BXY and the DXY too. If you don't know what the DXY is, the DXY is the dollar index. It's like basically, you can come here and look at the price, like what the price of the dollar is. So I have the dollar and then the BXY. The BXY is the same thing, but for the pound. So once again, when we're trading GU, why does that make sense? If we're trading GU and we're trading, Forex, it's the pound versus the US dollar. So if I have both of those pairs up and they both are doing, what lines up with what I'm looking for. So like let's say I'm looking for GU buys. What should be happening on the DXY and BXY? The BXY should be breaking out bullish and the DXY should be breaking out bearish. And now let's talk about it. I know it's kind of confusing. I'm not trying to confuse you guys. So let's just break it down so you guys understand. So when you look at the price of GU and you guys see how it's at 1.244, like whatever right here, that basically is telling you 1 pound is equal to $1.24409, correct? So if you, once again, let's say I'm looking for buys, I would want the BXY to be breaking out for buys and the DXY to be breaking out for sells because that's going to send GU up, because if the dollar is getting weaker and the pound stronger, that's going to send GU up. So if that doesn't line up with when I'm looking for entry, I'm just not going to take it. Once again, here's a good little entry of, once again, we're looking at how the BXY is breaking out bullish, DXY was looking at bearish. We're at lows. There's a fair value gap sitting right here. Price is pushing up. I'm just giving you guys, live examples. It's obviously Asia. I don't trade this. I trade, only London. But that's just an example of, correlation that I wanted to tell you guys, because correlation, in my opinion, really helped upgrade my entries, my trading, and it's really benefited my trading. So I wanted to quickly just show you guys also, when it comes to that 3-step setup that we were talking about earlier, if you're a part of my VIP channel, you have access to this channel where I literally send examples of the 3-step, because it always happens in various examples. You see right here, we had the liquidity grab, huge move up, this where we broke structure, tapped right back in here, nice rejection, take at the 5-minute high. I'm literally just giving you guys free sauce real quick of all these kind of examples of liquidity grab, break a structure, tap back in. They all look similar, but they all are different in their own ways. Once again, if you join VIP, you can literally scroll through here and just literally just back test and find these patterns. Once again, I like trading patterns. Forex pairs, they freaking keep repeating themselves. They mirror themselves over and over again. They shoot out these patterns all the time. You know what I'm saying? If anyone tells you that like pairs don't shoot out patterns, there's reasons why there's like, books on patterns and all that type of stuff. But with that being said, I hope you guys kind of like my quick breakdown. of, you know, kind of what I look for when I look for entry, supply and demand, where to kind of draw up your supply or demand zone, which is, you know, at whichever supply or demand broke the structure, what MAs I look for value gaps, how I use those for an example, and then correlation. I'm gonna give my screen over to EP where he's gonna go over some other stuff. Hold on, make host. Yes. EP is really good at liquidity
All right.
grabs. Wait, real quick. I have to move your screen over here. I'm on YouTube too. Okay, yeah, go.
All right. What up, gang? Little backstory about me. You know, I'm EP. I joined NoLimit about 7 or 8 months ago. And I've been trading supply and demand for about 1.5 to 1.7 years. Like that's how I became profitable. That's how I got my payouts, everything supply and demand. Recently, I've been, instead of using supply and demand as a strategy, I'm using it as a confluence now. And my strategy is liquidity grabs. So I'm going to be breaking that down and showing you guys how I do that. So perfect example, today's trade right here. So I'm going to erase all the drawings here and tell you guys what I saw. So um all right, yeah. So this is what it looked like at the time when I came into the market. So I trade New York only. So I like trading the first hour of New York only. So 6:30 to 7:30 a.m. That's my trading window. So I come into the markets and what do I see? Today was a weird day actually. So typically I look for a daily bias and I'll show you yesterday's trade as well so you guys could see how I determine daily bias. But typically I just look for what's structure on the 1 hour. Right now nothing really, right? We're in a low range. So I was okay. I was honestly kind of down for whatever. I just needed to see a good setup. I wasn't coming into the day with a bias. So after that, I go into the 15-minute. What do I do on 15-minute? So I'm gonna go back in time on the 6:15. So coming into the market, I mark up buy side and sell side liquidity that happens before the New York Stock Exchange open because this you can apply this to London as well, but for session opens, there's typically a liquidity grab in one direction because when all the liquidity is being entered in the market when the session opens, they need to fill those orders and everything, so they need to grab liquidity. So this strategy is very effective for London Open or New York Open. So that being said, we mark up our buy side and sell side liquidity that happened before New York Open. So let's do that right now. If you guys aren't familiar with liquidity, it's Luca just went over it, but yeah, I just think of it as any highs or lows in the market. That's a very simple way to do it. So right here on the 15-minute, we created this low because we just formed a bullish candle right after. We have another low right here. Oh shoot. We have a high up here. I'm gonna make that blue. And we have a high up here, right? So typically I'll have a daily bias and I'll only take trades in that direction, but today was a little different. I didn't have a daily bias, so I was just waiting for a sweep in either direction. Okay, so what happened? I came into the market. What time is it? 6. All right, I'm going 5 minutes and skip a bit. All right, we had PMI today at 7 o'clock. Where's it at? All right, so we had this low established before PMI came out. This was 15 on the 15-minute. I just dragged it there on the 5. But so PMI came out, drove price down, but what did it do? It came down and took out liquidity. So part of my strategy, if it is a news day, I have to wait till news to come out. So what did I look for? I just dropped a video on reading news, but I'll go over it right now. So before the news event comes out, this right here won't be here, right? It'll just say the forecast and not the actual. When the news event does release, you click this folder button and then this number will come out. This is the only thing you need to pay attention for news right here, right here. It says, where's it at? Usual effect. This section is the only thing you need to pay attention to. It says actual greater than forecast is good for currency. So if this actual number is higher than this forecast number, that'll be good for currency, meaning bad for the S&P. So when it came out, is actually worse than forecasted. So that means bad for currency and good for the S&P. So that gave me my daily bias come into the day. Instead of using market structure, I used fundamentals today for my daily bias. So after knowing that, I went on the 1 minute. I get for my liquidity grab setups, I go always on the 1 minute. And what do I see? So we just swept this leg of liquidity. Let's go up one more. All right, now we swept 2 legs. Wait for my entry. It's very simple. I just wait for a 1 minute break of structure. That's literally it. This setup, I did not have any supply and demand to use as confluence. So this is a strictly just a liquidity grabs setup. Can you repeat the Forex Factory number part, please? Yeah. And yeah, Dave in the chat provided a link to Forex Factory. But all right. So you said you want me to go over the numbers again? Yeah, I got you. So on Forex Factory, there's a forecast and an actual. The forecast will come out, before the news event, but the actual is what matters. All right. So when the event comes out, you click this folder down here and then pay attention to this section that says usual effect. Every news event is different, but PMI happened to say if the actual, which is right here, if the actual number comes out greater than the forecast, then it'll be good for the currency, meaning the US dollar. The actual ended up coming out worse than the forecast because it's 51.2 compared to 54. It's a lower number. So it came out worse than forecasted. So bad for currency. And the US dollar and S&P are inverse. So if it's bad for the currency, typically it's good for the S&P. So after that came out, I was only looking for buys and it lined up perfectly because price was at the time coming down to my liquidity to sweep. So once I did that, I wait for a 1 minute break structure. Super easy. That's literally it. Like I said, I like using supply and demand now instead of my strategy as confluence. But in this case, there was just no supply and demand zone. So it was, we just had to work with what we got. So I actually ended up not entering yet because there's no break of structure. My break of structure was right here. So price came up, created a high, came down, created a low, and came up and created a high. So I wait for a break structure on the 1 minute that closes above it. So this is structure right here. Very minor structure, but it's structure. So price closed above my 1 minute break, my 1 minute structure. So that's where I entered. As soon as I closed, entered with stops below the liquidity grab. And what do I do after that? I figure out my TP. I like doing my TPs based off structure, but so Luca just talked to you guys about a fair value gap. There's a beautiful fair value gap right here. So what did I do? I grabbed out my Fibonacci. This is the Gann box tool, but same thing as Fibonacci. But I just targeted the 50% of that fair value gap for 1.5R. Very simple. That was my partial taking place. And what happened? Bam, bam, bam. Simple trade. Ended up reversing. I thought it was actually going to run a lot because it lined up with news and everything, but it reversed. Still caught partials. So that's that. We'll go over yesterday's trade as well, so you guys get another understanding of it. All right, we're gonna go Tuesday. It's Monday. Tuesday, 6 a.m. There we go. All right, that's 5. Oh shoot. Do you only trade the S&P? Yes, I do. So for the strategy, it works. It's mainly an indice strategy, to be honest. It works for NASDAQ, US 30, but I realize I like the S&P for this the most just because the moves are a little slower. It's easier to get the entries, stuff like that. And I noticed the win rate to be better with S&P compared to US 30 and NAS. But if you were to trade London, you could do it for German 30, I assume. I've never tested it, but actually the strategy works for gold. I back tested it on gold, so you could try gold for New York Open or London Open maybe. But yeah, So let's give a little breakdown of yesterday's trade also. Coming to the market, obviously we're extremely bullish. But at the same time, I was like, all right, yeah, we're bullish, but I wouldn't be super opposed to taking sells because look how overbought we are. We've been going up for a few days straight. But bullish sentiment overall. I kind of wanted to. I like having my trades lined up, so I'll throw the Fibonacci on, and if I'm taking a pro trend trade, it has to at least pull back to 50% to where my has to grab liquidity and tap into the 50%. So that's exactly what I had marked up coming into the day. So we're gonna skip time now. Fix that Fibonacci. There we go. So, oh shoot, I need to mark up my liquidity. Most important thing. So this is kind of what the market looked like. I didn't mark, this is a low. This is a liquidity point, but I didn't mark that up because like I said, if I'm taking a pro trend trade, it has to tap into 50%. So I marked up lows that are at the 50%. So this one right here, where the 50% sitting at, we got this low right here. So what I was thinking was, all right, price could come down, tap into this, tap into that 50%, which also takes that low in reverse. So that's kind of my thoughts coming into the day. So what happened? Oh shoot. Hold on. Let me fix the fib. You gotta adjust the fib as oh no. You gotta adjust the fib as price goes. 50%, 50%, love those levels, and 25, 75%. Yeah, facts. So I have my 50% level right here, and I have my sell side liquidity right here. I wait for the liquidity grab to occur. Oh, wait, what? Hold up. It's a little scuffed. Sorry, I think I was thinking of a different day, but I must have caught, yeah, I caught this liquidity grab, I guess. So I'm looking back on my trade on my other monitor. Sorry, I was getting the different days confused. So yeah, this was the trade. Price came down. Like I said, we have the sell side liquidity. Price came down, took it. There's no supply and demand zone. Unless you want to count. I mean, you could count this, but like Luca says, we like it to cause a break of structure. But it came down, created a high, came down, created a low, but then ended up closing above those highs. So we get in for those buys. And then it plays out very easily. So it's a very simple strategy. Are you mainly marking these on the 15 or the 1 hour? So like honestly, we could do like a tiny little back test real quick so you guys see it from scratch, not a previous trade. So you guys see exactly what I'm saying. So we're gonna go, I don't know, random day in March. Let's go to New York session. All right, right here. So this is how I approach the markets every day. All right, so we're on the hourly time frame. I come into the markets on the hourly time frame. I determine a daily bias just by looking at structure. Right now we are bullish, right? We'd be bearish if we close below these lows. All right. So I have a bullish bias. Sorry. I can throw a fib on here. All right, price is already almost at this 50%. Now I go on 15-minute and I mark up buy side and sell side liquidity, but preferably just looking for buys. But yeah, we'll mark up both. So we got sell side liquidity here, sell side liquidity here, but that's about to be taken out. Sell side liquidity here, but that's where the fib is, so I don't need market more here. So let's just skip some time to New York Open. 45, 6 o'clock. All right, drag that fib now. So we created a new low. That's liquidity now. Wait for market to open. Now we just wait for that break of structure after the liquidity grab, then the break of structure. So if we are taking a counter trend trade, we can trade it into the 50%. But if it's a pro trend trade, it has to always tap into that 50%. So this could be a potential sell setup here because we just grab these highs on market open. After market open, grab these highs. So we could potentially trade it down into this 50% level as a counter trend trade. So you wait for a 1 minute break of structure. I'm honestly looking at this counter trend trade, showing you guys a different example. So right now this structure to enter off of. So we're not in yet because it never closed below this candle. So now I just created a new low. All right. All right, so we're in now because it closed below this low. So we enter there, stops right above here. And if you want to do RR base, you can do TP1, 1-to-1. I like doing market structure. I like targeting like more like certain areas of the market. You can do 1-to-1, 1-to-2, stuff like that. And let's see if it plays out. Bam, TP1 smashed. See if it ends up hitting TP2. Nope, but you know, we would take partials along these lines, somewhere along these lines. But yeah, that's just an overview of my strategy and how I approach the markets every day. It was kind of a little messy because the previous example, but hope you guys found this valuable. Anything else, Luca? Or
If you're done with that, we wanted to kind of answer questions as well as give you guys some advice after some questions just on, psychology, mindset stuff, as well as tips on how to pass your guys' challenges. Because I know a lot of you got out there. You want to make me host again, real quick?
yeah.
I want to make sure. Just like stop sharing your screen.
Oh, okay.
Make me host again. I want to make sure no one's
make host. There we go.
But basically, once again, guys, I hope you guys found this valuable. What we're gonna do now is answer some questions. If you guys in the chat want to ask them, we're gonna be answering now.
Supply and demand and validation rules. If it blows through the zone, it's invalid. It's kind of, or like Luke said, if it closes 50% within a supply or demand zone, then invalid. About losses, how do you manage losses? Can you give a little?
Sorry, no, I wasn't looking at the chat. Someone said invalidation rules. Invalidation rules, like EP said, if it blows through the zone, it invalidates it, as well as oh, there's people trying to join. My bad. As well as, in my opinion, like I said, I wait for my moving average confirmation because sometimes, it all depends on your how you like to trade, but there's also certain things I look for when it comes to the moving averages, as well as the correlation that will invalidate a trade for me. Someone said, is one RR good for funded? You can definitely make it 1-to-1 on a funded, or you can definitely pass, but you have to have a high win rate. I definitely recommend finding risk reward, but at the end of the day, like EP said, the one thing that I think is good for you guys to take that he said was that he looks for market structure. When he's taking a trade, it's not just like, all right, I'm gonna close at this 1-to-1, 1-to-2. It's like he's going to have like his alert set at areas where it's most likely going to react and possibly reverse. And at those areas, based upon how it reacts, based upon what it's doing in that area, you can determine if he wants to close partials, if he wants to stops to break even, all that type of stuff. So it's a good tip to talk about. How do you manage it? Manage what?
So how do you manage losses? Can you give like more?
Oh, manage losses.
I don't know if he means like
Cutting
manage
early, or does he mean
emotions.
yeah, emotion? Yeah,
Yeah.
whatever.
If you could give more
I
detail,
have
but
a good thing about a good. Okay, guys, listen to this. One big thing that I can say that um really helped me is, once again, when I have like a strategy like this, when it comes to like the breaker structure, the liquidity grab, the price action with the MAs with correlation, like I have all these confluences that if it all doesn't line up, I'm not even in the trade. One thing that changed my psychology when it comes to losses is, like, when you have like a firm strategy, you know if you should be in that trade or not. So like literally, like probably the last 5 trades I've taken, literally in a row, every single trade I like have no emotions behind it because all my stuff is like lined up. I've noticed if I take a trade that wasn't a part of my plan is the only time I'm like literally like sketched out thinking, oh my God, is it gonna come back up? If everything else is like lining up and I'm looking at the correlations, I'm looking, all right, well that's doing that and this is doing this, like at that point it's a matter of time. So I like hold, let it go down. At least an example, what if you start to trade and you lose the first entry? My problem is right now is I take 1-to-ones. My win rate is inconsistent. I win my fund to challenge one trade, then lose the profits the next day. Then I'm left break even. Any advice on getting past that? Wait. So my problem right now is 1-to-ones. My remains inconsistent.
can I
So
answer
if
this?
yeah, go.
Oh,
Yeah, EP go.
I was gonna say, so if you're closing 1-to-ones, then you have to have a high win rate or you just won't be profitable in the discussion. So if you're okay with that lower win rate, you have to target that higher risk reward to make it a profitable strategy in general. So target that 1-to-3, 1-to-2, or whatever. But you have to sacrifice the 1-to-ones. You have to get rid of that if you're okay with having that lower win rate. If um if you have a strategy that has higher win rate, then you can do those 1-to-ones. But if you like your strategy, you like what you're doing, you just have to back test, and I don't know. You have to go for that higher RR. That's the only way to be profitable because it's impossible to be profitable closing 1-to-one with 30-40% win rate.
Yeah, you gotta
It's
have a high win rate.
statistically impossible.
That's why, once again, the confluences and having a one high win rate. I don't know if you guys saw, but me and EP both have had pretty high win rates for the last couple of months, which makes it available that we can like close at 1-to-ones, all that type of stuff. I also have a strategy that I have a video on in my VIP because we have like videos in there to whatever about a certain thing I do to always be able to close partials, and it has to do with a certain indicator. If you guys want to learn, come join the VIP. A lot of gems in there, and once again always here to help you guys answer any questions. But I would say I'm not EPU, but me tend to close days if I'm in 50% drawn. It also depends on the price action. To keep your L small, yeah, that's a good. That is a good advice as well. But once again, it has to do with having a strategy. If you guys, someone said, what session do you trade? I trade London. EP trades New York. Once again, when it comes to strategy, it works anyways, or any
Any
session.
session.
It really just depends. Do you guys twin trade
What's that?
if I move my RR to 1-2-1-3?
What is?
Twin trade?
I don't know what twin trading
I think he
means.
delayed. I think he might have
Uh,
accidentally did something. I think he means like, does he trail stops maybe? I don't trail stops. I actually, that's a lie. Only like my last runner. So,
oh, I know what twin trade. It's when you enter with two positions
and
and
then you
one
just
is for
cut
partial.
one. Oh
Yeah,
yeah,
yeah, yeah.
No, I don't twin trade. I have magic keys. If you guys have magic keys, I definitely that's another thing I want to talk about. Me and EP both use magic keys. It's highly recommended, especially when it comes to challenges. It keeps your risk, tight, your risk management, and it really, once again, if you're having problems with R to R, in my opinion, it makes it really it helps a lot when you're literally like risking the same exact every trade. You're moving the literal line where you want it, and it's just, once again, your profits are going to stack using magic keys. In my opinion, it's that simple. Um,
All right.
um,
There's a question saying, shoot, where did it go? Oh, what if you start to trade and you lose that first entry? That's an add-on to that one question saying how
mhm,
to manage losses.
yeah,
Um, just have a set rule for yourself, like 1 to 2 trades max per day. That's my rule now. So, now it's not even 2 setups; it's 1 trade a day. And if I see like it hit TP1, then stop me break even. And it's printing a new setup. I'm allowing myself to get 1 re-entry, so 2 trades max in a day. That's just like a good way to approach it, and I'll keep your risk down for challenges or fundeds because you're only risking. If you risk 1% per trade, you're allowing yourself 2%, 1%, 2% max loss in a day.
Mhm.
Really 1%, because if your first setup loses, then that's the only setup you're allowing yourself to take per day. The second trade is just a re-entry. It's not like you're gonna lose and get a re-entry.
So I mean, I do. I don't know if you guys have noticed this, but I usually don't trade if I take a win. That's one thing that, EP is really good at possibly looking for another entry. And it's one thing I'm trying to get better at because once again, a setup is a setup. So if it lines up with your entry type, take it. But in my opinion, when I take a win, I walk away because why would I like take all that time and take that win, stack that profit, and then go back in and risk it? Because I don't like taking the third trade. I like to take 1 to 2 trades a day, like EP was saying. Honestly, like 1 trade a day, and then if it doesn't line up with all my entries, it's just a no trade day. And once again, I try and preach that to you guys because you don't need to take a trade every day. It has to line up with all your confluences. If you guys are taking in a different trade every time, you have no way to like sample size and actually get you have no way to get like data. You know what I'm saying? You have no idea what you're doing wrong because you're kind of just doing random stuff each time you enter a trade. So there's no really way to like track it. Um, if that makes sense. Someone said, how do you deal with win/loss streaks? Goes right into what I was saying about having a strategy. If you get into like a losing streak, I mean, once again, it's hard because if you don't have a strategy and you're just taking a loss because of all these different entries you're taking, it's like there's no real way to kind of like, you can tweak your strategy if you want. But I think it's about being consistent and using the same strategy. If you're going through a losing streak, you're able to actually detail all the things that's going wrong within that strategy. Because once again, just back test. If you guys don't back test, just like go back and review all your trades at the end of each week. I go and I look at all the trades I took, what went well, what didn't go well. If I take a loss on stream, literally after the stream, I go and watch my stream and watch before I got in the trade what the market looked like, what it looked like right before I got in the trade, and then what it ended up doing, because that's like 3 things. It's like you're looking at what the market looked like before, what it was looking like in the moment, and then what it ended up looking like, and you're able to literally like take notes and see why it did that. At least in my opinion, that's what I've done. I've been doing this for 3 years now, and that's how I've been able to, once again, that's why I use moving averages. Is I've noticed certain price action with moving averages lines up to like what I look for, so that's why I use them. A lot of people don't like using indicators. It's all just these little things that over time I've added to my strategy that, once again, now I'm able to sample size and understand all these things, and if it doesn't line up, I'm just not in it, honestly.
So, a guy had a question saying, my problem right now is I take 1-to-1s, but my win rate is inconsistent. I'll win on my funded challenge. But then he said, let's say my RR is 1-to-2. Should I take partials at a 1-to-1? If your win rate is low and the wins are inconsistent, then you shouldn't be taking partials at a 1-to-1, or also you only make 1.5% on that trade. It's just harder to, like you said, you have a low win rate. You need that RR to substitute and make up, like, or compensate for it. So I would even say target a 1-to-3, take partials at a 1-to-2. That's literally what I do every time.
Yeah. So,
Or
oh, sorry.
yeah,
No, but going
I was
off
gonna
the,
say
yeah, my bad.
I
No,
was gonna
keep
say
going.
my TP2 is never a 1-to-2. It's based off structure, so it could be like 1-to-2.5 or 1-to-1.8. But yeah.
Yeah, kind of going off what he said is like one thing that I've noticed from my back testing and my strategy and everything that I've gone through is my average win rate for that my trades run is a 1-to-3. So if I get to a 1-to-3 risk to reward and I have a majority of my position still going, I will be cutting it because I have data showing me that once it gets past a 1-to-3, it most likely comes back. You know what I'm saying? So it's like if I have data showing me that like it most of the time doesn't work out, I'm going to close the majority, put my stops to break even, and let my runners run. At that point, I literally will go out to a 1 hour time frame, find a supplier demand that it's heading towards, and usually put it like right near that box and wait for it to kind of get up there. And then my stops are break even, so it's either going to run to that, or you know, or come back to break even. Someone said, "How long do you let your runners run?" Um, it's up to the runner. It's up to the runner, buddy.
It does what it wants.
Yeah, I like I just said, I usually will, once again, if I'm at a 1-to-3, close a majority, find a higher time frame place where price is usually like looks like it's probably gonna head to. That makes sense. Once again, guys, if you guys don't know market structure, you don't know price action, that's the first thing you should learn before even trying to learn supplier demand or what we're trying to do. Like just trade. At the end of the day, trading is experience. It's one of those things where You got to learn what to do right by doing things wrong. Like seriously, like you're not
Hmm.
gonna learn how to do things right unless you do them wrong to start off. So someone said thank you guys for real, appreciate it.
I have fear right now of holding the 1 to 2 or 1 to 3 because I feel like the trade is gonna come back. I trade like Luca, and most of the time he times the 1 to 2 will hit. I just have fear trying to get over that. You just gotta trust the strategy.
Yeah,
Like
like I just yeah
you like back test your strategy and realize that. Well, I don't know. You said you have a lower win rate, but yeah, you just if you just trust your strategy. Like you're trading that strategy for a reason. You just gotta trust it. Just set and forget it. If you want to hire hold for
yeah
higher RR, do what Alex G says and fucking set and forget.
yeah, and that's why I want to recommend, like I said, having a strategy because once again, if I have all these things that are lining up to get into the trade, I have no worry. You know what I'm saying? I've done it all the freaking time. I'm not even trying to like show off or whatever, but like this last like round of challenges that I posted like was just a clear example of like there were so many nights I just did not enter all the things. I was like, this does not line up with all the things I'm looking for, and I only took one loss that entire time. I think I took 8 trades and took one loss to make 8.5%, which once again, a lot of you guys have trouble making the 8%. It's just being patient. If you guys are just taking random trades throughout the day, that's not trading. You guys are just like, you guys are still in the beginning stage of figuring shit out, which is fine. But don't be figuring shit out on a $500 challenge or or $1,000 account. Like, go risk a
Or
dollar
on a
to
fucking
five
hundred
dollars.
hundred dollar personal
Yeah,
account.
yeah, it's like I don't know. I can like I literally could tell like right off the bat if you're in the stage of figuring shit out or you know what I'm saying? So too many people don't have strategies, too many people let no rules, so can't complain on that EP. Lucas showing to show up at specific times and go enjoy the day. Yep. Yeah, exactly. Yeah, that's actually a really good thing. Me and EP show up at specific times every single day. Like literally, you will not see me or EP trade outside of our things. If we
Hmm.
do, it's so random. Like I literally
So
never
random.
do that. It would literally have to be like an A+ setup where I'm like, all right, there's no reason I should not get in this trade. But guys, I don't even like look at MetaTrade on my phone much anymore. It's like if I'm not at my setup, it doesn't line up with my strategy, and I'm not doing it. Once again, treat trading like a business. Um, have things that go well for you and then repeat those things. It's only going to improve. We're doing something. Someone said, do you enter again once you get stopped out, but your strategy still lines up? Um, if it lines up, honestly, possibly. If it was just like a big liquidity grab that took my stop loss, you know what I'm saying? And then lines back up, maybe. But I'm honestly not a big person at scaling, and EP's pretty good at that, but I'm not the best at scaling, and I like just honestly walking away. I don't get like mad about my L's. I feel like if I went revenge traded, whatever, it would be different, but I just take my L and leave it alone. Honestly.
Less is more in the market, guys. You'll make more long term, not
Yeah.
fucking revenge trading, not taking 5 trades a day.
Yeah, I promise you guys. Um we're gonna be heading off in a second. Last questions. We're gonna be on here for another like
Yeah.
2 minutes.
Yeah. If anybody got questions, send them in here.
If you guys are new to No Limit, follow me and EP. It's literally just the names that we have right here. Luca.NoLimit, EP.NoLimit on YouTube, Instagram, whatever.
Everything.
Find us. Our both of our VIP groups. We have free signals as well, where we teach you guys all this, as well as you're surrounded by a bunch of other people in the chat room that also trade similarly and are all pushing each other to do better. One thing I really like about my group that someone kind of mentioned last week that I didn't even really notice was how like being in a group where a bunch of people are like passing challenges really helps. If you guys are passing challenges, is a really good group to be in because everyone's telling you, giving you tips on what percent they're risking, how they're trading, how they're managing it, and they're giving each other tips on, like everyone kind of knows the ins and outs. And if you're in a chat room with 60 other people who are all working on challenges, it's only going to you know, increase your probability because that's like basically 60 people all sample sizing with you going what's working and what's not, especially if you're all trading a similar strategy. It's just it's bulletproof, you know what I'm saying? And having a community, having people to fall back on because it's like if you both were looking at a supplier demand zone and it got to that supplier demand zone and then like 5 people entered but like 20 people didn't and those 5 people took a loss, those other 20 people will be able to tell you why they didn't enter, why it didn't line up with what they were looking for. And they go, oh, no way. Like, I totally understand that. You know what I'm saying? Like, I totally see that now. I'll definitely write that down. And when when this occurs again, I'll be fine to not, I'll remember to not take that trade. You know what I'm saying? I haven't trade yet. NZUSD? Yeah, no. We've been on here honestly for an hour, guys. The hour just was like 2 minutes ago. If you guys have any questions on the market, what's going to do, any of that type of stuff, once again, me EP do go live on YouTube, so you're able to literally just come watch this trade live. We literally take the trades live on our accounts and just really
So
give
you
you
know we're
guys.
not fucking counting
Yeah,
bugs.
exactly. So, does the VIP get a Zoom every day? What funding programs do you guys recommend?
VIP, both of ours get Zooms every day.
Yeah,
MFF, in my opinion, is the best funding program.
yeah,
FTMO. I would just stick with those two. They're the most trusted firms out there. Why not?
yeah.
No reason to veer away from them.
Yeah, exactly. Yeah, like that's honestly came from experience. We kind of spent a couple months like trying out all
Yeah.
these, and at the end of the day, it was like, for what, for what?
Yeah.
Thoughts on too many pairs on watch list? Very good question. I do not like that. I like having, once again, I trade GU, AU, GJ, gold, like things like honestly kind of correlate, and like once again, I use correlations to them to yeah, whatever. Are you guys max funded with MFF? No, we're both just funded just like 100K
Not
to
max.
200K. Yeah.
Working on that right now.
Yeah, max funding is ideal coming up. But we'll get there soon, you know what I'm saying? That's what we're looking for. But yeah, once again on those too many pairs, I'm telling you, if you can't even be profitable with what you're doing right now, cut down the pairs, focus on 1 to 2 pairs during one session, figure out a strategy, and then from there you can start kind of applying it other places. So write that down. Find a session that works best with your lifestyle. Figure out if you're a scalper, a day trader, whatever. Find a strategy. Find a group that trades like you. Maybe find a group that's doing challenges like you, whatever the fact may be. And find people that actually have your back and that are willing to push you to success. Appreciate all the help and advice. Definitely take into account to keep working on my strategy and mental cognition. Yes, sir, bro. Keep working on that strategy. Keep working on your mental cognition. We were gonna talk a little more about mindset stuff, but once again, we preach that a lot of the times on our live streams and on Instagram, all that type of stuff. So you'll see that. At the end of the day, I hope you guys learned something. I'm probably gonna end it right about here. If you guys want to see this recording, it's probably gonna be on YouTube. So appreciate all you guys for tuning in. Hope you guys learned something. Me and EP appreciate all you guys' support, and I hope you guys, find this information valuable and makes you want to come join the group and learn from us. But that's about it. Love you guys.